Lon, good to have you back on the program. Do you feel more at ease as things unfold in Europe?
Well, perhaps a little bit. I think this is pretty much a short-term fix or lift to the market. I don't think we have a real good long-term solution, so I think we should still remain pretty cautious and careful about how we go about investing in that area.
What about the news coming from Moody's? Because not all of the French banks were downgraded. In fact, BNP wasn't even part of the mix, though they are on credit watch, as Moody's says. But we had SocGen being downgraded, Credit Agricole as well. What about this theory that from PIMCO, now Arian, that we might be inching closer and closer to a banking crisis?
Well, to start with Moody's, I think that you had two of the three downgraded, and it was only one notch. And I think if you had a waterfall event of defaults in the peripheral nations in Europe, I think you could have a banking crisis. Now, I know that you saw some draws on some U.S. dollar swap currency line or from via the ECB today, and that's clearly disconcerting. Now, the big French banks denied it, so we don't really know who that was. And so that's not a positive signal. But as far as the exposures go, a lot of the European banks continue to have big exposures to the most troubled peripheral nations. And should they default, that would be a problem. And I think that's why we saw Germany the other day talk about setting up some sort of plan, whether that's a capital or liquidity system, to support their domestic banks.
Okay, well, any reprieve then that there are reports that China might be buying into Italian bonds? Do you even believe the story?
It's hard to believe it, or at least it's hard to say what exactly they will buy and how helpful it will be. I know there's a similar story about them buying into Greece, and whether that actually occurred or not, I could not say. But it doesn't seem to, if it did happen, it doesn't seem to really have helped the situation immensely. I guess it's always helpful to have China and I guess some of the other BRIC countries, because I know Brazil as well as Russia said that they'd have similar monetary support for those nations, Italy included, I guess. That liquidity source would be helpful, but at the end of the day, it's not going to solve the problem. We need to figure out how these countries can lower their debt outstanding as well, and that begins by fixing their inherent deficits.
Okay. Now, Lon, correct me if I'm wrong, but you still sound very hesitant about Europe. You said you feel a little bit better, but do you think, like some that I've talked to recently, that this is all going to end badly?
I'm still not in the camp that says this is going to end well, that's for sure. I guess bad can be a relative term. So when we approach the market from an investment standpoint, we have added to some positions recently, but we're looking for security bottoms-up stories that we can get comfortable with about the risk exposure. And it's more utility-based, something like a France Tel or an Enel in Italy, things where it's an essential service that people will likely pay their bills. Not so much putting a big wager on the banks, just because it is really hard to ferret out exactly what their exposures are.